Let's first of all talk about the package, because clearly the markets had expected a deposit rate cut and seemed to be a bit disappointed. Why did you decide not to cut rates?
Well, we decided to use the most appropriate tools in order to target the risks that we see. And we have a three-fold package, if you will. One is to address the liquidity risk in a very open and generous way. The second is a targeted refinancing tool in order to make sure that the credit flows to the economy at very beneficiary and interesting and attractive rates, with an incentive to continue the flow of credit. And the third one is an additional envelope for our asset purchase program of 120 billion that can be used before the end of the calendar year. And I am really fully committed to avoid any fragmentation in a difficult moment for the euro area. So the high spreads that we see due to the coronavirus clearly impair monetary policy. And as I've said during the press conference, we will use all the flexibility that is embedded in our asset purchase program. And clearly the package that we've approved today in all its three dimensions, including the asset purchase program, can be used flexibly, precisely to avoid the dislocation risk. And we will use that package forcefully, with determination, and using the flexibility that we have.
Let me bring you back to the comment you made in the press conference. I think you were referring to that already, that you're not here to reduce bond spreads, but there are other tools and actors who could do that. So perhaps you could elaborate on that.
Well, we will use our tools, including the asset purchase program, deviating temporarily from the capital keys if necessary, in order to support the euro area and to avoid any dislocation risk. There is no question in my mind that we should be doing that.
So there won't be, or you will, in the event there will be fragmentation, you will fight that fragmentation?
We have the tools to fight the fragmentations, absolutely, and we will use them.
Okay. Let me bring you back to the composition of the additional APP you have announced just today. 120 billion euro, I should say, until the year end. Will that be sort of a pro rata approach per month, or can you deploy them as you wish? And will it be mainly the private sector?
We have full flexibility. So there is no predefined monthly amount. We can assess the needs, the risk, and how we can best deploy the tools that we have. So no preset amount. That's flexibility number one. Flexibility number two, we will assess the risk and where we need to intervene. If it is in the public sector, if we see a risk of dislocation, of fragmentation of any kind, obviously we will deploy that tool in direction to this risk. And as I said, if it needs deviating temporarily from the capital keys, we will do so as well.
Looking ahead, so you have done quite a lot now when it comes to monetary policy. What is left is, for example, buying equities, sort of a last resort, or a pause, or is it thinkable for the ECB?
For the moment, we can buy on the secondary market corporate bonds, and we are doing that. Now, there is a limit to how much you can buy. There's a feasibility issue, which clearly is upon us, and we cannot do so in massive amounts. So we deploy our APP both in the public sector and in the private sector. But clearly, the latter is not that ample and that deep that we can massively intervene in that particular market.
Let me bring you back to the comments you reportedly made in the call between EU leaders, and I think it was on Tuesday evening. You said that 2008 could be back. Is that something you think is a likely scenario if there won't be bold action also from the fiscal side?
I think every crisis is different. The moment we are in is different from 2008. What I certainly try to impress upon leaders, and what the Governing Council of the ECB called for, is an ambitious and collective fiscal approach. Because when you analyze the crisis at the moment, it requires a fiscal approach, fiscal tools. You need to deploy resources to the health sector, make sure that people who are losing their job are going to be supported, make sure that you don't damage the economic sector for a long period of time. If it is addressed vigorously and collectively, the shock that is applying to the economy can be short-lived and can be of a temporary nature. So the whole point of this effort is to collectively address, with all the tools that we have, the risks that we see, whether it is liquidity, whether it is flow of credit, whether it is fragmentation. We need to make sure that all those risks are addressed by all the actors using all their tools.
What we're hearing out of Brussels, though, is that for now there doesn't seem to be a collective plan for Monday to come up with like a bold package from the fiscal side. Do you think it's still enough time over the weekend to come up? And do you think that Chancellor Merkel will again take perhaps a leadership role?
We both have been through financial crisis in the last 20 years or so, and there is an awful lot that people with goodwill and determination can achieve, including in short order. So I very much hope that under the leadership of President von der Leyen, who has announced already a determination to look at state aid, to look at the Stability and Growth Pact flexibility, the finance ministers on Monday and the European leaders later on in the month will take the right measures.
You said repetitively on several occasions that EU leaders need to come up with a solution sooner than later. How much time do you think do we have?
I think the sooner the better. And as we said at the Governing Council today, it needs to be ambitious, it needs to be collective.
Let's talk a bit about equity markets. I know you're not an equity analyst, but still, I mean, what needs to be done to get the panic out of market? Because they keep on dropping like a stone, and eventually it will also spread to the credit side.
As I said, a collective approach with complete understanding by all leaders of what needs to be done in order to resist the lasting consequences of this shock, and to make sure that the economic forces are maintained. And that touches on the health sector first and foremost, and then the employees, so that while they are not going to have work or their job is under threat, they keep enough benefits, and they're kept afloat while the crisis unfolds and is completed in short order. That's really the goal that all policymakers should have. Make sure that it is as short-lived as possible, and that the economy can then bounce back.
Yeah. If you compare the crises, I mean, the last one was a pure financial or economic crisis. This time it's a virus. So the big question is, how much can monetary policy and fiscal policy do against the virus in the end?
You're right in that it is first of all a health issue. And a health crisis that requires fiscal resources to be applied first and foremost. All actors must see what tools they have, how they can address the risks. We see the risks that I have mentioned: liquidity, flow of credit to the economy, fragmentation, and we need to make sure that our monetary policy is transmitted properly and is not impaired. So we will act, and we will use all the tools that we have, including in the asset purchase program, in order to defeat those risks.
It looks like a lockdown of specific areas is probably the best solution to contain the virus, but it has very detrimental effects on the economy. So when we look at the economic effects from the crisis fighting, how bad do you think will it get? You know,
I'm not a health expert. I'm not an epidemiologist, and I don't know what is the best response. But all I know is that all hands should be on deck, and all the goodwill should be deployed with the resources where they should be in order to avoid liquidity risk, credit flow risk, dislocation, and the fragmentation and the instability that is not conducive to a good economic development as we must see them in the future.
Let's talk a bit about one part of your package to alleviate the pain from the banks. How unstable is the situation of the Eurozone financial system, given the market route, and given also that it kind of, at least we see first signs that it goes to the credit side as well?
Well, don't forget that as part of our package, we have a massive liquidity line that is accessible to banks at very good conditions. Second is we want to make sure that they are in a position to continue to give credit to the economy. So we also have a massive and very attractive program of targeted refinancing. On the supervision side, the supervisory body of the ECB has released a number of buffers in order to, give them the degree of flexibility that is available under the current rules. So with all that, we hope that this is going to help them go through this difficult moment.
Do you think it will also help them to take risk again on their balance sheet? Because that's what I'm hearing from many banks, that they are like shutting down when it comes to risks currently.
Well, we have advocated at the Governing Council, and I said that earlier, a guarantee scheme that needs to be put in place either at the national level, through the state, through agencies, or at the European level, in order to actually encourage the risk-taking by sharing that risk, in order to bridge the economy onto the recovery phase. But we need to really mend that period, which is going to be difficult.
Yeah, exactly. But the period will be difficult. But do you have any idea of how long this period will be difficult and what it also means for, the general economic outlook for this year?
The general economic outlook has been revised downwards by all institutes. We are publishing as well, and we have revised downwards. And clearly, the situation is evolving almost on a daily basis. How long it will take is for epidemiologists and virologist experts to actually tell us. But our job is to make sure that we help the economy, as I said, bridge over that period of time, which is it's not going to be forever. Clearly. Human nature is such, and research progress and the measures that are being taken in order to contain and delay will produce the impact. We will come back to a much better situation, and the economies will bounce back. But our job for the moment is to make sure that, as I said, from a monetary point of view, we help bridge over that period of time with the tools we have and using them as decisively as we can.
Can I ask you about the timing of your decision-making? Because the Fed stepped out quite aggressively directly after that G7 call. Did you consider doing something like that as well, or why did you wait until today?
It's not a question of waiting. It's just that we had a monetary policy meeting that was scheduled for today. So it's really within a few days of each other that we are making those announcements. And it was good to have a unanimous decision reached by all members of the Governing Council together in order to face the current circumstances.
When did you personally realize that this is a true crisis? It's not just a health issue somewhere in one part of the world?
As we saw what was happening in China, and I believe that it really started to resonate very strongly when contamination started reaching the shores of some of our European countries. And that's how we really started working on the set of tools that we can use and to deploy them as best as possible.
I know you've been asked during the press conference, but I need to ask you again because Donald Trump, the US president, has just announced a travel ban, banning a foreign disease, he's calling that. What's your response to that? Do you think it's a wise idea to have that travel ban for 30 days and to be so, decisive in that policy measure?
I'm not to judge one measure or the other by any government, but I doubt very much that disease have passports and are aware of borders. They ignore those borders, and I think that all economies should be mindful of taking the right steps to protect households, the people, enterprises, and make sure that, as I said, we bridge over that collectively.
How concerned are you about Italy and the situation there? We have seen spreads a bit wider, but also, obviously the country is worst hit by the coronavirus crisis currently.
I think that the package we have and the tools that we can deploy will be completely available to Italy. We are very mindful of the fragmentation risk, and we will deploy all the tools that we have in order to avoid that. This package is actually designed with a view to avoiding the risks, including the risk of fragmentation. So we'll be there, no question about it.
With that crisis now, do you think the lower for longer stance will be even lower for longer, because we are obviously having the worst crisis since the financial crisis currently?
Well, there are lots of things that are low at the moment, but the fact that interest rates are low is actually of good support for the economies. We need those rates at the moment.
One more question on the de-anchoring risk of inflation expectations. Are you also keep on looking at the five-year forward, because Mario Draghi was looking at that instrument, or do you look at others?
We look at that one, but we also look at others, and we are in the process of collecting as much as possible data and information, particularly from consumers, to also understand from their perspectives how they see prices. I don't think that we can be locked into a single indicator. We have to use a playad of indicators.
Are you postponing your strategic review now, as a last question, or...?
We are deferring the scheduled meetings by 6 weeks, and we certainly hope to resume the normal course of business, but with a 6 weeks lag, in order to allow for the organization, the facilities, the teleworking, methods that we are now implementing to fully operate, be absorbed, and then we'll renew the effort, of course.
Madame Lagarde, thank you very much.
Thank you.